Hello, everyone, and welcome to today's webinar. My name is Joel Comerford. I'm one of the consultants over here at Lawpath, and I will be your host today. Now, before we jump in, I'd like to get a bit of a disposition check. So, how's everyone doing? Can I get some goods, some bads? If anyone's new here, maybe throw that in as well, just so I know if I need to explain a little bit more in detail about the usual procedure of today. Just go ahead and throw it in the chat, guys. Let's see how we're all doing. Oh, loving it. Good day so far. Perfect. Keep them coming, guys. So you've joined us today for Sole Trader Essentials, ABNs, invoicing, and getting paid on time. A practical must-attend session designed for anyone running or about to launch a sole trader business in Australia. What will we cover today? This session is all about setting sole traders up for success. And so we'll be covering how to correctly register and manage your ABN, best practices for invoicing clients that reduce admin and stress, strategies for getting paid on time and what to do when things go wrong, how to stay compliant and avoid common legal and accounting traps, whether you're new to business or looking to tighten up how you operate. This session is going to be ideal for you guys. Let's tick some boxes. Now, before we get into our guest speaker today, for those of you who are new, Lawpath, we've been around for 10 years. We're located over here in Surrey Hills in Sydney, but we have our tendrils all throughout Australia. We originally were a legal firm, an online legal firm, adopting a lot of the AI methods that a lot of businesses are taking on these days. But naturally, we had people saying, hey, can you help us register companies? Do you do trademarks? Can you help us with accounting? We've just registered a new business and we've got, we don't like our current accountant, et cetera, et cetera. So now essentially we've branched out into an umbrella company. We do your legal, we do your accounting, we do your tax, basically all the main pillars of compliance. So these webinars are designed to offer you some solid advice, to offer you support, but also help you demonstrate the kind of assistance Lawpath can be assisting your business with if you are new to running operations or just transitioning from one form of support, whether it be legal or accounting, to another. Now, as I mentioned, we've been around for 10 years. We've served over 600,000-ish businesses. It's easy just to say half a mil. And that should be pretty much everything on our end. If you wish to know more about Lawpath, you can go on our platform. We've got all the information you could ever need about our lawyers, our accountants, what our message is, where we come from, what we like to do, what we strive for. Everything you'll need to know about Lawpath is there. Now, if you are new as well, or you're semi-new and you wish to catch up on some previous webinars that we've done, just go ahead to YouTube and type in Lawpath and you will find our channel there. It's got some really solid information, as well as testimonials from clients and everything else that a newbie should need to know about Lawpath. And then also, I will be sending out an email this afternoon, maybe an hour or two after the webinar, with all the details from today, the slides, some information on some of our offers, partner offers, etc., and then essentially a breakdown and a summary of what we've gone over today. Now, let's introduce today's speaker. Today, we are joined by a very special guest, Timothy Quinn, our Head of Tax and Accounting at Lawpath Tax and Advisory. Tim is a chartered accountant with 17 years of experience, and he's advised hundreds of small businesses on tax planning, compliance, and financial strategy. I'm always a little tongue-tied when Tim's in the room because he's such a presence. He's worked at a director level leading tax divisions and is passionate about helping small businesses run smarter, not harder. You can check Tim out on our Lawpath platform, and I will advise on all his details within the email as well. So that should be everything for me for now, guys. There is a very, very important tax-related exclusive deal that we have that I will go into at the end. This is exclusive to everyone who's present today, and it's mainly targeted towards sole traders, so stay tuned for that. And we will also have a Q&A as well. If you don't have time to stay till the end for the Q&A and you just have some burning questions you wish to ask, go ahead and throw it into the chat, and Tim will do his best to answer those throughout the webinar. Thank you so much, Tim. Take it away.
Thank you very much, Joel. Very kind as ever. Guys, this is all for you. This is for the sole traders. I just really want to start by giving you guys a shout out for those of you on the call today that are running your own business and have taken the risk of going it alone. It's not easy, and we get it. So we really are here to support small businesses and sole traders. It can feel like you're trying to do everything and wear a million hats. Let Lawpath wear one of those hats for you. Let me try and take the tax obligation off your chest. Try and make this simple for you. Sole trader feels really simple, right? It's just you. There's no company structure to worry about, nothing like that. As anyone that's been doing this for a little while works out, running a sole trader business is complicated. It's not like being spoon fed when you're an employee and everything's done for you. You got to do it all. Let me give you some basic tips that will put you right. If you're new to this, don't be scared. There's support for you. The Lawpath platform is built with you in mind, and we'll hold your hand through this. Why is it so important that you get set up right? I can tell you, I've seen plenty of small businesses doing the ABN setup and coming back to me 3 or 4 years later saying, okay, I'm finally ready to lodge a return, and it's a bit of a disaster. So why it matters and why you should be here and hopefully taking notes today and enjoying the slides afterwards as well, is that you can take steps now to make your life really, really easy, both from a tax compliance perspective, making sure you get paid on time. There is nothing worse than going into your zero if you've got your account set up or your spreadsheet, whatever it is, and knowing you've got a bunch of money coming in and it's just not dropping and the bills are mounting. So we can talk a bit today about some tips to help you with the cash flow. So not just compliance, a bit of value. Let's get right into it. Start with the basics. Sole trader, for those of you who know, is you. You might have an ABN, but that ABN is not an entity. It's not a different legal being. It is just you. So with all the good and bad that comes with it, it's your name, it's your reputation, it's ultimately your risk. So no risk, no reward, as they say. You'll get the rewards from your work. The income will be directly attributed to you. But of course, that you do take on a degree of risk. If things go wrong, you can personally be sued for it. Because it's your reward, you're taxed at your own rates. So that's reasonably simple, straightforward. You basically don't have to worry about dividends. You don't have to worry about corporate taxes, any of that complexity. The money that you earn is your own. And of course, you can reduce that taxable income with eligible expenses. When we talk about good bookkeeping, I never require perfect bookkeeping. I'm yet to find the client that has perfect bookkeeping and that presents to me a set of ready to lodge tax information. If you are that perfect client, please call out to me in the chat. We'll sign you up today. That sounds fantastic. The reality is no one's perfect. So when I say good bookkeeping, do the big stuff. The big stuff is please get a separate business bank account. There are plenty of banks out there that will get you in the door with next to no fee business accounts. I can think of Westpac off the top of my head. They've got cracking business bank accounts. Just do it. It's not compulsory. It will make your life a million times easier. Because when your bookkeeping slips and falls behind and you're not perfect, having a separate business bank account will at least allow you to retrace your steps. If you're doing everything through your personal credit card, you're going to find it very, very hard to make sure that you're claiming all of your deductions later in the future. The more accurate, the better. Again, not perfection. It's not what we strive for, but the more accurate, the better, and the more chance of you making sure that we can reduce your tax legally, of course. So what are your tax obligations as a sole trader? Your big ones are your income tax. So for those of you that are red hot keen, you might have already lodged your 2025 tax return because it opened up for lodgement, 3 weeks ago and change. I can tell you I haven't done mine yet, but I'm usually late to the party, but some of you may have already. particularly if you've got a refund coming in, which can be the case for some sole traders. That's the big one. GST is your other big one. Of course, if you're generating more than $75,000 of revenue a year, you are compulsorily required to register for GST. And of course, GST means that you have to add 10% to the fees that you charge your clients, which you give to the ATO. And then the bonus side of that is that you get 10% back on your eligible business expenses. So you might be registered for that voluntarily. You might have gone over 75K and had to. If you've gone over and haven't registered yet and you're starting to panic, please don't panic. A lot of people are surprised when I tell them this. The ATO are not out to get you. The ATO are generally human beings and that they understand that small business compliance is difficult. And with an accountant in tow, you can really clear up any mistakes without being hit too badly about the head by the ATO. So don't panic if this is all news to you and you've been going for a while. We can help sort you out. And of course, there are PAYG, both W and I. So that's PAYG on wages. If as a sole trader you have an employee, which is possible, but also potentially installments if you've been profitable in the past and had to pay tax in the past at year end. The ATO will give you a love letter saying, congratulations, we'd like you to start prepaying next year's tax. So you might have that tax coming through as well. And depending on how you set up, you might have any number of different taxes as well. And nice place to pause. Paddy's come in with a question. I love questions. It breaks up the monotony for you just listening to me rub it on. So Paddy's question is registering a business name mandatory for an ATO tax return? No, an ABN is sufficient. So you can get a business name, but you don't need to. Just an ABN is fine. You can hold yourself out as your natural legal name. So depending on your tax duties, your tax obligations, you might be considering, even though you're a sole trader now, you might be looking to the future. You might be thinking about business structures. As a sole trader versus a company, your taxes aren't a million miles away. So a company tax return is structured kind of the same way as a sole trader tax return. The big difference, of course, is with that separation of legal entities. When a company is taxed and pays its 25% to the government, that's not the end of the story. So a lot of people think that when they become a company from being a sole trader in the past, fantastic, only paying 25% tax. Maybe in the past I was paying up to 47% tax. Well, that's great. Once you've paid that corporate tax at 25%, then you still have to get the money out of a company to yourself. So you have to pay yourself either a salary or start doing dividends. Look, it's beyond the scope of today, but when you are considering different business structures, there's no one structure that is immediately tax efficient, more tax efficient than the other. So just bear that in mind. Talk to your advisors before you make any big decisions on business structures. They all do have slightly different timing obligations and tax payments. And trust is a whole new ballgame, which Joel knows I love talking about. So he's going to kick me under the table if I go too far today. Look, make sure you've got yourself registered. You should already have a TFN. If you're an individual in Australia and you've paid tax at any point in your life, you will have a TFN. If you've forgotten it or haven't written it down, you can call up the ATO and find that. When you're running a business, it is compulsory, or an enterprise, as the tax law calls it. If you're operating an enterprise, by which they mean any sort of business other than the business of being an employee, you are required to have an ABN. Now, you can register an ABN for free online. It is a very complicated, annoying process with the Australian Business Register, and I see plenty of people get it wrong. I do recommend paying small fees to a qualified expert like Lawpath to help you out, but it is doable and it is quick. So it's not the government wants people to have ABNs. They don't want to make it too difficult. GST registration, as we mentioned, is optional and it can change. You can register for GST and then subsequently deregister. You can start business not registered and subsequently register. It's again very flexible and it's voluntary up to $75,000. Some businesses, we do recommend you do it even when it is voluntary. Staying compliant is really important for being a sole trader. It's not to say that you'll get, like I said, hit around the head too much if you're a little bit late. If you're paying a little bit late, usually you can get away with it once or twice. But the reason why you want to stay compliant from day one is if you need to lean on the ATO at a later time because you are legitimately late for a reason beyond your control, or you need a payment arrangement because cash flow is just not permitting you to pay that tax debt. If you can point to a really good compliance history, which says, hey, I've been doing the right thing for 2, 3 years here. I've been on top of everything. The ATO is much more willing to help you out and sort you out with great terms on your tax payment arrangements. So it's really important to stay on top of it from early doors, which is why a subscription model like Lawpath is so good because you basically can't go wrong. Let's talk a little bit about that ABN process. So why do you need it? It's used everywhere. So all over and that's why they want you to put it on your invoice. This is basically a way of you telling the government and of you telling your clients and suppliers and bankers, this is who I am. This is what my business is. It's if you're just called Timothy Quinn, well, there's umpteen Timothy Quinns out there. I could be anybody. Who knows? I could be using a fake name anyway. If I have an ABN, which is 11 digits or whatever it is, it's unique. So you'll only ever have that ABN linked to you. It's not transferable between businesses. An ABN is linked to a particular entity, a particular individual. It's legally required. You have to have one. If you don't have one, your clients are actually legally required to withhold payment from you. So if you give a client $1,000 invoice and you don't provide an ABN, they are actually required to send $470 of that $1,000 invoice to the ATO, which is the top marginal rate. So very good incentive to follow the rules there. And of course, once you've got your ABN, it's easy to do your tax lodgements like your BAS and things like that. As I mentioned, you can apply online for free at ABR on the ABR. Just tread carefully. When they're talking about entity type, it's easy to get wrong. I'm currently dealing with an issue for a lovely client who has unfortunately registered their ABN using an other unincorporated entity structure type. It's through no fault of their own. It was an honest mistake, and it has caused all manner of issues. So just tread really, really carefully when you are trying to register yourself. To do that, you'll need your TFN, your tax file number. So contact the ATO if you don't already know it. Look up your business activity type. They're quite broad, so don't feel worried if your business doesn't fit exactly. Just get roughly, just understand what your business is going to be undertaking. And you can get those ABNs instantly. Sometimes there can be a bit of a delay, but then usually pretty quick. Like I said, skip the hassle. I do recommend you use Lawpath for it. Lawpath registers, I think at some point we're about 10% of all ABNs or 10% of all small businesses in Australia registered using Lawpath because it is just so easy and it's very cheap as well. You can just pass that responsibility on to someone else. Once you've got your ABN, that's not the end of the story, of course. It never is. You have to keep it up to date. Now, what do I mean when you say keep it up to date? If you move your address, if you're renting and you're hopping around a lot, which plenty of people are these days, of course, you have to maintain your business address with the ATO using your ABN, using that ABR service or using Lawpath. The reason being is that the address that's linked to that ABN is used for all sorts of official documents. So if the government needs to be in touch with you, they will send mail to the address that you have registered with the ABN. And it is no defense for you to say, well, I left that address 2 years ago. It is actually a positive obligation on you to maintain your address. And if the ATO is sending you warning after warning and you're not getting them, too bad. They are being treated as being constructively received by you because it's up to you to basically keep that address up to date. Likewise, any phone numbers, any different associates maybe that you've recorded linked to your ABN, anything like that does need to be updated. Just as a matter of course, put it in your calendar once every 6 months or 12 months just to have a look. and of course, when you move house and things like that. What can happen if you don't keep your ABN up to date and if you're not doing your tax lodgements on time is that an ABN can be deactivated. It doesn't get deleted, it's still there. So anyone can still search you up using the ABN lookup service. But what it will show is that your ABN has been deactivated. Now, that's obviously not a good look if you're going out to new customers or new suppliers and saying, here I am, here's my business. And some very diligent person looks it up and says, well, deregisters. It's sort of it's a red flag that maybe you're not up to date with your compliance. So keeping yourself updated is a much better look. Of course, if you do stop trading, which happens all the time, as we know with small businesses, don't forget just to cancel that ABN because otherwise you'll keep getting asked to lodge BASs and tax returns that you're not liable to do. So you don't want that. So just the last thing to do before you pull up stumps is make sure you just cancel your ABN after you've lodged any outstanding tax returns or BASs. Any questions? Feel free to jump in before we start talking about invoices.
We have a Q&A from Jen.
Fantastic. Yeah, I'll have a look at that. Jen asks, social enterprises. So Jen has asked, what about a sole trader to a social enterprise? Social enterprises are really strange because they're not actually an entity type. A social enterprise can mean any number of different things. They typically mean a for-profit company, a PTY limited, where you have some social enterprise aim. So where you will commit, on your website or somewhere else to say 10% of our profits go to X or some other structure like that. So Jen, you can certainly convert from a sole trader to a company. So regardless of any social endeavor off the back of that. It's a good point, actually. If you do ever want to convert from a sole trader to a company, it's another good reason to have your books in order and have really, really good high quality bookkeeping. Because normally when you're transferring a business, either from from yourself to a new company, it seems weird. You are the business, but effectively, you as a sole trader own a business. And if you become a company, you have to sell that business. Normally, that will trigger capital gains tax. We don't like that because it doesn't feel fair. It's still your business. If you have really good records, and we can basically bundle up this business and say this is what it is, and we're transferring it. You can actually use capital gains tax rollover mechanisms to say, well, hold on, it's just my business now, and it's going to become my business just in a different structure. You can elect to basically pay no capital gains tax. So, Jen, you can certainly do that. You can certainly roll up a sole trader business into a company, and doing so by keeping your records up to date will mean that we can exempt you from capital gains tax most of the time. Thank you, Jen. And Emma's asked, can you reactivate the same ABN if it's deactivated? Yes, you can. So you can have a deactivated ABN and you can reinvigorate it. Just get in contact with the ABR and they'll help you out there. Good question. On to invoicing. So there are rules about invoices. They must contain a certain amount of stuff. You can go in and do a manual template. You can download a template from the ATO. You can have a look. Any number of people have put out templates. I often find the easiest way is, look, if you're getting bookkeeping or accounting software anyway, like Xero or MYOB or QuickBooks, these invoices have been tested to death and they are compliant. So if you're using software, Australian software to invoice, this will already be contained. Obviously, it needs your name and your ABN, of course, very important. You need the details of your customers, anything relevant. You need an invoice number or identifier and the date that it's been invoiced. And of course, you need to say what it's for, as itemized as you can. It needs to basically accurately describe what is going on. And of course, you have to say the amount due and you have to specify if there's GST payable on that amount or GST included on that amount. And of course, payment instructions and due dates. So I do recommend just automate all of that. It'll make tracking it much easier anyway. It's not complicated. Our invoices are not incredibly detailed, but it is important to get those essentials right. And I'll just check, there's just another couple of questions through. If you register for GST, the question here is, does the GST compulsory registration threshold turnover of 75K, does that include other income? No, it doesn't. It's just from your source of business income. So it's purely business income. Great question, Margarita. These are just nice to haves on the invoices. They're not compulsory, but obviously the easier an invoice is to understand, the easier it is to get it paid. There's nothing worse when you issue an invoice on 30-day terms, and then on day 29, the customer comes back and says, "Well, your invoice isn't clear. You'll need to reissue me a new one." And the 30 days starts again. Don't let them get away with that. So let's just make it as clear as possible and break it down by phases if you're doing anything like that. Any sort of project-based work, talk back to milestones. If you have a contract on foot that says, "I'm going to bill you on these milestones," replicate that wording. It's very hard to push back on there. And look, extra information. There's no problem adding more than just a quick description. You can add a couple of sentences, you can explain it. And like we said, anything that personalizes it, it just reduces disputes and delays, gets you paid much faster. Just another question from Patty before we move on. The business income statements, so are we registered to do a BAS if you're not registered for GST yet? No. If you're below the threshold and you haven't registered for GST, you won't have to do a BAS, assuming you don't have employees. So this is a tricky one, and this is kind of a lesson that a lot of sole traders learn early on. Typically, first invoices you send out, you feel a bit meek and mild. Here's the amount. Would you mind paying? Pay it when it suits you, no rush. And you learn very quickly that if you don't set firm expectations up front, that will be abused. So give realistic, accurate payment due dates on whatever terms you prefer. Give the payment methods that you want. If you're giving different payment methods and some of them are more expensive to you, obviously within regulations, make sure that you can offer discounting for certain payment methods. Just check that, of course, which should probably check on Lawpath that that's all allowed. But be firm, set the expectations early, and make people stick to them. So if you have 30-day payment terms and they don't pay it for 60 days and you don't chase them till 90 days, they will continue doing it for as long as you let them get away with it. Any good accounting software will let you issue invoices by emails and send automatic reminders if they are not paid, if they're not accessed on time. I thoroughly recommend it. We'll talk a little bit later in today's presentation about that escalation. Of course, you don't want to come in too strong from a day on, but a little nudge, little friendly reminder goes a long way, and it reduces that manual touch point too. So again, I'd put them in your invoice templates and leave them there. Don't remove them. So just keep reinforcing that in your conversations with clients as well before you invoice. Let them know that these are the terms. Don't let it come out of nowhere. So that's why we love any sort of automation that reduces your work. I'm not going to kid yourself. I'm not going to kid you or myself. Tax is fun for some people. We're a strange crew. Accounting and boring manual invoicing is not fun for anyone. No one enjoys it. Don't waste your time on it. Get yourself set up on automatic schedules. Use software to your advantage. Use integrations wherever possible. Do the more interesting stuff that your business does. Do not waste your time on this. Just set it up once, set it up right. Check in with your accountants and your advisors. Let someone else take care of it. Just have a little natural pause point for anyone to chuck in a question in relation to those slides, because we're going to go into how you can reduce overdue payments and get that cash flow moving. Feel free to add to the chat anytime. We can come back to it. Don't rush. What I really like on these invoice platforms, on Xero is a good example, is that if I run a small business, I can set it up very easily that I get a little email notification that says, "Hey, Joe Bloggs has opened this invoice. So that's a nice one. It's nice to know that they're being received, they're being looked at. It's also a nice one if you maybe have to have the conversation down the track when Joe Blogs comes back and complains and says, "Well, I didn't pay that invoice, but I never got it." Well, hold on, you did, and we've got the tracking here. So you must have forgotten, Joe. You actually opened it on this day, and I can see that you saw it. Oh, okay, fantastic. These automations are really, really strong and they are a great way to get paid faster. I think Xero puts out on their website the blurb about how much faster they think people get paid. I've seen it in action. It's true. Automated invoices with follow-ups get paid much faster than manual invoices. The more payment methods you give, the clearer they are, the better. Um, Getting paid quickly, even at a little bit of a discount or a cut because you've got to pay fees, is better than getting paid late or never at all. And you'll be able to tell from your accounting software who is paying late, give them the terms that make them pay for their lateness. So adjust your pricing. You can put in penalty rates for late payments, interest, anything like that. I recommend it. All right, what do? Joe's not paying. He's just refusing. Or maybe he hasn't even refused yet. He's just left it. Have a path of escalation. So start easy. Don't lob in a big angry letter from a lawyer. Although we're happy to do that at stage 4. At stage 1, just resend the invoice and a quick friendly reminder. The reality is, plenty of people, I'm guilty of it all the time. I get an invoice. If I don't pay it straight away, I forget about it. I move on with my life. I go and spend the money on something more enjoyable. I just won't. If I'm not in the right position to pay it at that second, I won't do it. So a resend and a friendly reminder will get most things paid. Okay, I still haven't paid it a week later. That's when perhaps it gets a bit firmer. So that the wording might be personalized. You might step in and actually give some context to show that you're not just a bot, you're a human being. Joe, you remember we discussed our terms on X date. These are the payment expectations. I'd really appreciate you paying before I have to, incur late fees that are in the contract, anything like that. Hopefully he's paid by then. Maybe he hasn't. A letter of demand goes a long way. I say that with a degree of caution because I've seen a lot of poorly worded letter of demands that look like ChatGPT spat them out with a pretty bad prompt, or there's lots of spelling mistakes and they look angry and written by someone that lives in an unlit basement. A letter of demand that's well written using the Lawpath template is a very strong document. It doesn't fly off the handle, but it's firm and it's important. It's something that demands to be taken seriously. Something that's just, I'm going to sue you, I'm going to throw you in jail, blah, blah, blah. It gets ignored. But a firmly worded, professionally drafted letter like the ones that are available for our clients on our free document templates, which we can all go in and adjust to personalize that based on your information, is a very, very strong mechanism indeed. It's kind of a last warning. If a client's receiving that, they know that something is about to hit the fan and it's time to take things seriously. We can still escalate from that. If nothing's happened, okay, it's time to start getting serious. We can refer that to a debt collector. You've got a nice trail. You can point to the reminders that you've given and the follow-ups. It's an easy debt to collect. Unfortunately, debt collection is expensive for those of you that have used it before, but going to court is expensive too. If you're lobbing in small invoices, local courts and things are a cheaper way of doing it. But of course, anytime you're getting someone up in front of a court, it's going to cost you money. So we hope that we don't get to that stage. We always try and close it off at an early point of escalation. So again, having those terms and conditions and consequences for breach in your invoice, in your contract before you even invoice, you can always point back to it. It's no surprises. If we've come to this point, you should expect it. How are we going to stay organized? If you're issuing even a moderate number of invoices, even if it's 15 invoices a month, 30 invoices a month, manually keeping track of when they're being paid, when they're due, if people are part paying, if terms have changed, if you're, it's just going to be impossible. I genuinely don't know how people did it before computers. Obviously, there were manual systems in place and manual books of record. I I would have done something else. I wouldn't have become an accountant in the pre-digital age. There's no way I'm that organized on paper to do that. Digital systems these days are easy to use. They're not foolproof. There's I can tell you as a fool that's fuddled through some of these systems before, they're not foolproof, but they have a gradual learning curve. They're easy to get started and they will skill you up. Great little plug for the Lawpath accounting advice platform. Really, really nice way to get started in business. If you're on our advice platform, we will set you up in your accounting software. We'll give you the basics in our first consultation. We won't throw a million bits of information at you. We'll get you enough to invoice your clients. And then we'll say, let's check in a few weeks and let's introduce you to more complicated ways of using Xero or something else to help you like that. You get real-time visibility. You know what's due when. You'll have a good expectation of, okay, I've got to pay this bill in a month. Before then, I should have collected this, and this. I should have enough money to pay that bill. It'll also tell you what's overdue. Like I said, if you've set up the automations, it should be chasing, but it should also give you a list of who you really need to go and wrap across the knuckles and get that payment. Look, we've put in there, of course, you can use a spreadsheet to track it. Please don't do that for too long. It's going to get unwieldy and you'll have a formula error breakdown and then maybe a mental breakdown off the back of it. If you are going to try and do this without software, you're going to struggle very quickly. Bank feeds are great. Like I said, when you have that business specific bank account, they're not just for companies, they're for small businesses too. You can link them to your accounting software. It is a bookkeeping of last resort. It's saying, even if I let everything else go to hell, at least I've got my business bank account flowing transactions into my accounting software. Accounting software is getting better and better. Some to most of your bookkeeping will be able to be almost automated. So at least if you've got that set up with the bank's transactions coming in, you'll be 90% of the way there. So integrating invoicing tools, some of you will be in industries where you need industry-specific invoicing tools. So for some of you, Xero won't cut the mustard, particularly those in construction, obviously use quite specific ways of invoicing and when there's things like milestone payments, it's not necessarily well suited to Xero. All of the big industry-specific invoicing tools out there will integrate into Xero. And that's why accountants like Xero, because the integrations are good. Anytime you have to maintain two sets of books or two sets of records, it's going to be a pain in the behind. So we do recommend whatever external service you're looking at using, make sure it does integrate into your accounting software. This is a hard one. This is basically saying, I know that you don't want to spend an hour a week on accounting. It's not exciting. It's not fun. If it doesn't get done, if you don't do that hour a week, you might discover 6 months down the track, 12 months down the track, that it's going to take you weeks. So that old, the old saying, a stitch in time saves nine, it is true when it comes to accounting. When things are fresh in your mind and you know what's going on, it's easy to do little bits of admin, particularly accounting admin. It's very, very difficult. What on earth was I doing 12 months ago? I can't remember what I had for breakfast. If you're anything like me, you're going to struggle to do that late. Logging expenses and receipts as you get them is really, really important. If nothing else, just take a photo on your phone. Have a drive linked to your phone where all of your business, you just take a photo, it goes in. At least it's what when I was an auditor we used to call an SYA file, a save you of something file. It's just it's something of last resort. If your bookkeeping is imperfect, you can come back to it. Just chuck an hour in your calendar. Friday afternoon with a glass of wine is my recommendations. Cash flow strategies for steady income. Why do we like steady income? What's wrong with lumpy income? Well, any income is better than no income, right? But the reason why we like steady income is because it helps you smooth out the good times and the bad. If you get lumpy bits of income where you're getting big spikes, you're tempted to spend. I know for me, on the 15th of every month when I get paid, I get a little bit excited and I fire up the Amazon and I shop too much. Maybe if I was paid weekly or paid daily, I wouldn't be tempted. So we do like smooth income, and here is some tips to help you get that. Forecasts are really important because you don't know what you don't know. And if you're going out blind and not knowing when your expenses are going to come and how much they're going to be, you're going to struggle to really meet those lumpy expenses. When we talk about building a buffer, particularly for slow periods, in my industry, I don't think any accounting firm bills more than $200 in January because everyone's on holiday. We know that in my industry, we've got to make sure we've built up a buffer because we've still got to pay wages in January, right? But we've got no income. So we know because we forecast, because you'd hope that we're good at it in our industry, we know that we've got to leave a buffer from the pre-Christmas period to make sure that we cover off the slow periods. If you're in work that is subject to weather, and you know that certain periods will be rained out and that's going to affect your income, of course, you've got this all covered. Or if you're in the agricultural industry or anything like that, you're of course very seasonal, then you know that you have to build up particular buffers. And it comes over time, right? It's you never get it right. You don't get a perfect year one. The more you do it, the more you understand your expenses. But understanding your rhythm and billing to that rhythm and knowing when it's going to come in and when it's going to go out is going to help you a lot. And then you do this before you're invoicing. This is not something you decide once you've invoiced and you rush to collect. You should be planning this in advance. And again, accounting software out there will help you set these budgets and measure your progress against these budgets too. This can be a hard one, depending on your industry. Some industries are very used to it, the idea that you're paying up front as much as half up front, usually a little bit less. If you're in an industry that expects it, and particularly where there's material costs involved that aren't just related to you personally, then that's great. On bigger jobs, it becomes more important because you don't want to be left holding the bundle. If your client falls short and doesn't pay the full amount, at least you've covered your costs. So that's of course a very strong strategy that not everyone can do. We love, for these smooth invoices, we love milestone delivery. So not just all at the end when everyone's happy. Stages, we've got there 3 stages. It might be more, it might be 5, 6, 7 stages, depending on the project, to make sure that you've got that cash flow over the whole period of the project. Send them promptly. Now, this sounds really silly. An invoice sent day of delivery is twice as likely to get paid on time than one sent 2 days subsequently. It is crazy. It seems like that shouldn't matter. The prompt sending of invoices when work is done, it prompts a certain portion of Australian businesses, the better portion, I would say, of them, to pay it straight away because it's front of mind. It's there. You're seeing the work is done. Yeah, hopefully happy. Pay it then and there. It's done. If you wait, if you go away, you give someone time to think about other things, to mentally move on, that invoice, when it gets sent, is more likely to go down the bottom of the pile and it's more likely to require follow-up. So promptness, consistency. If you're billing on a monthly job, bill it monthly. Don't bill January and then leave it a few months and bill 3 months worth in April. It's going to get messy and ugly. Just be consistent. Chuck it out every month, and that's going to make you much more likely to be paid. And that's why we love those recurring invoices. If you're on a retainer model and you're not doing just automated monthly invoices, you're shooting yourself in the foot. After you do invoice, it's not the end of the story. You've got to monitor. We've talked through this to death. Make sure you use your system to the utmost to track what's due and when it's due, and don't let things get away from you. Just talk very quickly about some common mistakes you do see. Just not getting your invoice right, giving someone an excuse not to pay you, and basically, I mean, I've said this to death, please get that business bank account And again, stay on track of things as you go. Don't leave it until the end of financial year or worse. And don't leave those overdue invoices to rot on the vine. They're not going to pay themselves. They are going to require your attention. And just a monthly or weekly check-in will save you a heap of issues as you go. You can DIY, try it. I do encourage it. I'm yet to see someone that can DIY as well as an accountant can help you out. If you're not sure, if you think you might be missing out on deductions, or you think you might not be across your compliance obligations, if you think you're missing out on payment of invoice and you're not sure, you're just losing track, get some expert help. Lawpath is very sharply priced indeed. My friend Joel here is going to talk you through a new offering we've got here in relation to sole trader tax plans. We are here to help. We're not here to bleed you dry. We genuinely do love doing this for small businesses, and it is an area where you can get very timely and cost-efficient advice. These are just some of my colleagues that you might be dealing with if you do come across to Lawpath Tax. My pretty little face up the top. We're growing this team all the time, so you might be dealing with someone else by the time you come on board. But we've got a team of extremely experienced accountants. They've all got at least 5 years of Australian tax experience, and many have upwards of 10 or more.